Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our commodity technical analysis update. I'll kind of go over everything in this. We'll go over the 10-year yield, dollar, commodities, precious metals, oil, natural gas, uranium. We'll cover the whole gamut of the commodity complex. Looks like we're pulling back. The overall market's pulled back today. And we'll get in there and I'll give you my financial opinion of what I'm seeing in the market. So let's dive in and I'll give you my opinion. Here is the dollar. The dollar is rocketing higher. Fear is out there. Looks like people are converting their items to cash. And I'm seeing a little bit of bond strength. But commodities and stocks are both selling off. That's got to go somewhere. That pressure's got to go somewhere. It is going into the dollar right now. So this move is continuing higher in the short term. And I do not think that this will last forever. I think it will be however much longer that this recessionary fears last. Or if we go into recession, it may last through that as well. If we go into a recession. Looking at the 10-year yield, the 10-year yield is popping down a little bit. People are rotating money into bonds. There is some fear there. Now, this has been quite volatile. We had a really good run in May and beginning of June. We've pulled on back from that, and we've had a little bit of a launch here the past couple of days, and we hit our head on this resistance line, and we're bouncing back down today. We're down 3.5%. So pretty volatile in terms of the movements in the 10-year yield. Conversely, bond prices went up today, 1.72%. And this is the move lower that we've seen. Are we going to see a move higher in bonds? I would say yes, if we get an inflation and people get scared. If we don't have that inflation and people calm down, I think that bonds will continue lower as interest rates go up. So we've got conflicting viewpoints happening on different time frames right now. Now, if we go into a recession and it's bad enough, interest rates could go down and bonds can go higher. And that could be short to more of a short-term type movement, short-term being less than 2 years. And I am playing it for the inflationary aspect. I think we have problems in the energy markets, and I don't think that even a recession can kill the demand enough for oil to go lower in a meaningful way. So we've got recessionary fears. We have fears of demand destruction, but we haven't seen that demand destruction yet, and we don't know if that demand destruction will ever materialize. That demand destruction, looking at history, has only happened a few occasions in time. 2022, when we shut down the economy, that obviously impacted it. 2008 impacted it. And there was a couple of other times in history that's also impacted it on longer time frames. I don't think that impact will be there. And I could eat my words here. I don't think it'll be there from the housing market. I don't think we'll have a deflationary type of event. If we do, we should be able to see it before it happens. So at this time, I am saying that the demand will not, at this time, from what we can see, be destroyed through the housing market, at least not yet. It's going to be years out. Looking at commodities, we're basically flat commodities. Kind of zooming in here, we do have a lot of momentum to the downside here. This bounce is losing its steam here in the short term. We could come down and do some more sideways to lower action out of commodities in the short term. Gold is also selling off. This, I think, is tied to the recessionary fears. This could also be tied to a lower expectation of inflation. That does come up in the price of gold. And this is heading lower today. Silver also heading lower, down 1%. Again, it's not a huge down day, but it is a down day nonetheless, and it could almost be a bearish engulfing where we had a little bit lower in the short term. It's not a big day. The big days, like this guy, that has a lot of momentum, and that momentum has to get worked off. We have to see smaller and smaller. Well, usually what we see are smaller down days accompanied by it where we get an equalization of buyers and sellers. Platinum also selling off down to 868. This is a battle between the buyers and sellers in this general vicinity right now going on. XAU to gold ratio, we dropped down below this support line. The support line is this guy right here. We've dropped down below it, and looks like we're trying to find some footing down here. We've got a nice big bullish piercing engulfing pattern here, and the down days aren't as big. The up days aren't as big either. Like we're coming to some sort of equilibrium in the buyers and sellers. But again, if you look at the preceding move, we've got some momentum coming down here. It's got some momentum behind it. So it's going to have to get worked off, and we could see further downside in this ratio, which means potentially further pain in the stocks. We've got a bullish piercing here, and we've just been tracking sideways. We do see some opening and closing prices start to consolidate. The size of the candlesticks are getting smaller. The buyers are starting to equal the sellers in this general vicinity. That's what we're seeing. Looking at SILJ, it's got a similar pattern right on support. That white line is the support line, and it's an area where we've hit, multiple times before. So that's where I'm getting that support from. Zoom in one last time on it, and that's where we're getting that support on the white line of SILJ. That's where we were at. Coming on down, crude oil also selling off some today. I've got a nice cool line coming through here. So coming on up, we're going to get this guy out of here. Zoom back on in. And what we're looking for is we're getting this kind of selling pressure coming down. We're probably going to have to contract a little bit before heading higher. I will say that crude oil, again, we are using the strategic petroleum reserves to basically try to cap this price. So they've been releasing. This is a driver of inflation. They don't want inflation. The Federal Reserve and the government, they don't want high inflation numbers. They have to hold this down. That's a buying opportunity, because when the strategic petroleum reserve ends, I don't see how they're going to hold it down much after that, unless they keep releasing until they run out. Natural gas is moving up higher today, 7.66%. There's our pop higher with the bloody nose. Again, this thing doesn't last forever. These pop higher, this is just a short-term pattern, and then we have to have the fundamentals and the market sentiment push it higher after that. But I think that natural gas is a huge opportunity. I think that with the LNG terminal being down in Freeport, that United States natural gas is cheap. It's definitely cheap in relationship to international natural gas pricing. And when that goes back online towards the end of 2022, there's your opportunity. This price should start to merge with the international price, which is far higher than where we are at $6.50. So natural gas is where the opportunity is, in my opinion. That is, oil is too, but natural gas especially. Because we know that there's a broken link in the system that is causing this price movement lower in America and higher in the international pricing. XOP, yeah, you know me, a little bit of a down day today, down 1.2%. The momentum is flat. This does look like the momentum is starting to dissipate. Does it mean that we can rocket higher? Maybe. I always say maybe because no one knows the short term. I don't see a pattern necessarily here, and I don't see a reversal candlestick. That is what I'm waiting for. But I don't see it yet. And we're seeing, up and down movements in all these different companies. More of an up movement in natural gas companies, more of a down movement in some of the more oil-specific companies. Energy service companies still a little bit lower, down 2.35%. We're above this last white support line. We could head lower here on all of this, guys, if the overall markets continue to head lower. We get tied up with the leverage in the system. Coming on down, we're going to go to uranium. We're at 47.65 on the futures pricing. To me, it looks like we're starting to move sideways, basically come into a consolidation period where we could then determine where we go next. This does have a fractal that looks like we could pull back a little bit more and get one last hooray to the downside out of it. It does look like that. And if the overall markets are selling off, well, might as well sell a little bit of everything. That's what they seem to think like. The Sprott Physical Uranium Trust getting a little bit more selling pressure today, down 4.89, still above support. And URNM is right on the support line with the down day today. We're right on that line here. Scrolling on down, solar getting sold off today. That's TAN, the solar ETF, getting sold off. Again, this still looks pretty bullish from this. That's your big bullish engulfing that kind of started this thing. And we've got resistance all through here. We got to break through that if it wants to run. I'm not playing this. I'm just simply stating, solar. I've got no skin in the game there. COPX, copper, just to show you that, it is falling down today 4.5%, and we're right on this support line, the big old long-term support line. We got to see if this support line holds. If it doesn't, well, we're going to be meandering a little bit lower. We're going to get a little bit more of this bear trap that I call it. The market fundamentals out a couple of years from now are pretty positive copper. In the short term, and with the recessionary fears, we could see further downside. CRB index to the S&P 500 heading higher. Again, this could be a shoulder head shoulder. It is a possibility. And then we head back down lower with all the recessionary fears. Commodities obviously get sold off if sentiment and the fears are high enough. Fundamentals don't matter at that point. Fear does, and the leverage and the money that needs to be raised to cover your margin loans. Looking at the Dow Jones to gold, we're right on the resistance support line. We're right on it. We're trying to break through it, but right now we're just moving sideways with it. Gold to oil ratio is at 16.67, pretty much average. Scrolling down to REMX, which is an ETF, we're still in this big pattern. We got a lot of selling pressure today. We got to see if this bottom line holds. Lithium also selling off. Basically, everything is selling off on that aspect. And basically, the whole markets are selling off today outside of the bonds, the bond market. We're still in a downtrend for the S&P 500 selling off today, down 1.15. And the U.S. Composite Index also down 2.26%. But it has broken above its trend line. Is this a retest to move higher? The S&P 500 is lower than its trend line, so difficult to say. No support from the overall markets there. XHB, which is the home builders ETF, right against the downtrend line. We're right on it. This could very well break lower if the sentiment and the fears are strong enough. And maybe a recession is coming. Maybe there is validity to that. A lot of these soft agricultural stocks moving higher in cocoa futures, wheat selling off. This is a reversal candlestick to head lower in the short term if it decides to go lower. I have no idea what the ramification, I should say, what the reasoning would be to be very high in wheat and all these other ones, which is all fears from Russia. How this would change necessarily with a recession. It would be, I think, roughly the same. So maybe other fears in the market are changing or shifting in these types of prices here for soybeans, wheat, and corn. Because I find it hard to believe that a recession would solve our food problems. Well, people are going to eat less, right? Looking at the agricultural business ETF, this guy's still pulling on back. It does look like it's slowing down in its movements. Movement 1 here, movement 2 here, movement 3 here. Looks like it's slowing down, like it wants to put in a bottom at some point. So that looks a little bit better. Aluminum moving lower here, but coming up to support. It's starting to slow down a little bit too. And then looking at the Baltic Dry Index, basically a small down day. I've got it on a weekly here, but a small down day today. So that's going to wrap it up, guys, for kind of the overall market update. Basically, we saw everything sold off outside of bonds. And the dollar was stronger today as well. So those are the two areas that were stronger. Everything else was pretty much weaker. If you guys like this type of analysis, please give me a thumb up. Subscribe to the channel. Subscribe to the website below. The Platinum membership is the membership that I would choose. And that's all I've got for today. So we'll catch you next time. This is Finding Value.